Is the Fed ending money? If it's about to happen, will cash stay king? The Federal Reserve Bank of the United States, or simply called the Fed, is in charge of the country's monetary policies. One way it accomplishes this is by regulating the money supply, but most of the time, we normal people won't understand their new policies. Some of the recent information from the Fed really made many of us confused. Is the Fed going to end money? Hey all, welcome back to Finance Explained, where we explain to you how money works. We hope you're already a member of our family. If not, hurry up and tap on the subscribe button and ring that bell icon. It's never too late. Now, the biggest question to be discussed today is the Fed ending money? After watching this video till the end, you'll get a clear answer. A board of governors appointed by the president and verified by the Senate look after all the functions of the Federal Reserve. The Board of Governors is in charge of the monetary policy and supervising the operations of the Federal Reserve banks. This is spread across the country in 12 different regions. Overall, the Federal Reserve is critical to the operation of the U.S. economy, and its choices and actions can have a major effect on financial markets, interest rates, and economic growth. So whatever the board decides, it will affect us, basically. So it is our right to understand whatever they have decided to do with the dollar. It's true the Fed has decided upon certain subjects, and the two major ones being FedNow and CBDC. It is normal to misunderstand the Federal Reserve policies or actions. This may lead us to believe that the Fed is ending money. If the Fed engages in extremely aggressive money printing, we may be concerned that this will result in hyperinflation and a devaluation of the dollar. But for now, there's no need to worry. We'll explain to you why. It is important to note, however, that the Fed's obligation is to maintain equilibrium prices and promote maximum employment. This necessitates that it carefully weighs the supply of money with the demands for goods and services in the economy. The Fed's actions are guided by economic information and evaluation, and it has a variety of tools at its disposal. It's also worth noting that the Federal Reserve isn't the only institution in charge of creating money in the economy. Commercial banks also play an important role in the money supply because they create money through lending. If you have no idea what FedNow and CBDC are, don't worry. That's why we're here. Just watch this video with your mind like an empty slate, because your first impressions could be wrong. First, we will start with the FedNow service. What is it actually? The FedNow service is a new online payment system developed by the Federal Reserve banks. This will allow banks and other financial institutions to offer their customers the ability to send and receive payments 24/7. The FedNow service will be a reliable and secure alternative to existing payment systems like PayPal and all. The existing ones frequently take several days to settle transactions. Have you experienced such delays during online transactions? The FedNow service is intended to complement your existing payment systems such as Fedwire and ACH, allowing financial institutions to offer real-time payments to their customers. This will allow for faster and more efficient payments. The FedNow service is still under progress, with an estimated launch date of July 2023. For this, the financial institutions must connect to the service, and the Federal Reserve banks will ensure that the service is going well and meets the needs of a diverse range of users. Now, we will be optimistic and look at the advantages of FedNow. One of FedNow's notable advantages is that it will allow quicker payments, allowing individuals and businesses to transfer funds smoothly. Then comes convenience. FedNow will make payments more convenient by allowing users to make payments in real time without the need for physical cash or checks. This system also has the potential to reduce costs associated with payment processing and clearing by making payments more efficient. This could benefit both consumers and businesses. FedNow will be launched with advanced security features to detect fraud and other types of financial crime. This will potentially increase trust and confidence in the whole payment system. So, that was all the positive things we could extract from FedNow. Development and implementation of a real-time payment system is a complex process, and there may be challenges and delays associated with the FedNow rollout. Of course, there would be competition with the private sector. Some critics argue that the establishment of FedNow will stunt innovation and competition in the payments industry because private sector firms will struggle to compete with the Federal Reserve's resources and scale. While FedNow may lower costs for some users, there may be costs related to carrying out the new system, such as the need to upgrade current facilities or technology. Some people and privacy advocates may be concerned about the possibility of greater surveillance or tracking of financial transactions in a real-time payment system such as FedNow. But we already have those online payment systems. So, do we need FedNow? The thing is, FedNow is not going to affect us much. It is the banking sector which will face the difference. On the FedNow website, this is being clarified. They are focusing on financial institutions and businesses. Before going to the next section, we recommend you bookmark our other finance-related videos for future reference. Finance Explained will explain to you the complex things in the simplest ways, and the only thing you have to do is subscribe. Now, coming to the next factor which created confusion for us, CBDC. A CBDC, or central bank digital currency, is a digital form of currency issued and backed by a central bank, such as the United States Federal Reserve. A CBDC differs from other types of digital currency, such as Bitcoin, because it is issued by a central authority and usually tied to a fiat currency, such as the US dollar. But many people think CBDC is Bitcoin. A CBDC's goal is to provide a secure and reliable digital currency that can be used for everyday transactions while also providing the benefits of a centralized currency system. Stability and regulatory oversight would be way too easy in this case. A CBDC could potentially provide advantages such as faster and cheaper payments, increased financial inclusion, and improved security and privacy. Going through the benefits of CBDC, that's actually pretty impressive. The CBDCs have the potential to increase financial inclusion by providing people who do not have access to traditional banking systems with access to digital payments and financial services. CBDCs can lower payment processing costs, making transactions cheaper and more effective for individuals and businesses. It can provide increased security and privacy because transactions can be completed using advanced encryption and authentication technologies. CBDCs can also give central banks more monetary policy control through offering a new tool to handle interest rates, inflation, and other macroeconomic factors. Anything new will face some challenges at first. CBDC has too. Development and implementation of a CBDC is a complex process, and there may be difficulties and postponements associated with the implementation of these digital currencies. It's vulnerable to hacking and cyber attacks, which could jeopardize the system's security and integrity. Our society has more intelligent hackers than ever. CBDCs have the potential to disrupt the traditional banking system, resulting in changes in the way money transfer and credit allocation occur. So people who always choose conventional methods will face a drastic change. But we will say, always learn to unlearn and always be adaptive. And as usual, CBDCs also raise privacy concerns because transactions can be tracked and monitored by the central bank, potentially leading to surveillance and loss of financial privacy. There are several approaches to designing a CBDC, including a wholesale CBDC for use by financial institutions and a retail CBDC for use by the general public. A retail CBDC would work similarly to physical cash, but in digital form, and it could be stored in other types of electronic accounts. The Federal Reserve and other central banks around the world are currently researching and testing the potential benefits and risks of a CBDC in order to better understand how such a system could be implemented. However, there is no concrete plan in place for the Federal Reserve to issue a CBDC at this time. But in the future, we can expect CBDC. Using CBDC, the government can take a look at the illegal transactions, if any are happening. And also, the government can easily regulate what you can buy and how many or how much you can purchase. For example, if there's a shortage on some resources, the available ones have to be shared equally. The richer ones will have more. That equation will not work out. The government can make changes using CBDC, like one person can only have 2 numbers of a particular item, and so on. If you found this video useful, then give us a like. Don't forget to subscribe to Finance Explained, because the education that we need most is financial education. Comment down below what you feel about the new decisions of the Fed. Will it change? If so, would that affect us badly? I hope to see you soon. Bye.